Okay, let's do our last and final work together of chapter 19.6, buying and then recording amortization for our intangible assets. So we have a couple of things in our question asset thing here. We've got January 4th, we paid cash for a patent, and on January 6th, we paid cash for a trademark. And then we also have some asset information over here that tells us that our patent has an estimated useful life of 9, the legal life is 12, salvage value, again, nothing, trademark 14 years versus 10 years, and no salvage value. So the first thing we should probably do is journalize our buying of these patents and trademarks in our cash payments journal. So when we do this here, it says that we are going to journalize the transactions during the current year on page 1 of the cash payments journal. And so let's do that first. We've got on January 4th, we pay cash for a patent. So our patent is what is going to go in our account title. Our check number is 532. And patent gets the debit, oh my goodness, debit for 18,000, and cash gets credited for 18,000. And then we have January 6th, we purchase a trademark, check number 538. We paid $30,000 for the trademark and cash credit. So like I said, when you journalize the buying of an intangible asset, it's very similar to the way we journalize any of the other buying of our plant assets. So that one shouldn't be too difficult. Okay, now let's go down and remember that our amortization expense is recorded as an adjusting entry. So they're actually going to give you, the adjusting entry here in your general journal. So we don't actually have to record any of that. You do need to remember, though, that adjusting entries are always done at the end of the fiscal period. So our date is going to be December 31. So we're going to do the amortization for the patent first, just because that's the one that's listed currently. And remember, when we are figuring out our patent information, we take our, I'm just blanking on the name of it. Our original cost, good grief. Our original cost of 18,000, and we divide that by whichever is less, whether it's the estimated useful life, or our estimated legal life. Remember that if you need help with this, go back to our PowerPoint, and here you'll find what you need, your original cost information. Remember, there is no salvage value on intangible assets, and then we divide that by the number of useful life years. So when we are back here, we have our patent has 18,000, and our estimated useful life is less than our estimated legal life, so that's 9. So 18 divided by 9 is $2,000. So we're going to come down here and we put our amortization expense. Remember, you do not need a document number because adjusting entry serves as our document number, and that's going to be debited for 2,000. And then we credit directly into our patent account, just because there is no accumulated amortization. It just goes directly into the patent. Okay, then we also have our trademark to worry about. So our trademark, remember, our original purchase price was $30,000, and it says it has an estimated useful life of 14, but our legal life is only 10. So we're going to divide that 30,000 by 10 years, and we're going to end up with $3,000. So again, we put amortization expense, 3,000, and then we credit directly into our trademark account for 3,000. So this one should be, I think pretty simple compared to all the other ones that we've done this chapter. Pretty easy on intangible assets. So you can go ahead and go back and do your 19.6 on your own. as well as your 19.6 application problem. And then don't forget you have terms and questions due tonight as well.